Hello, my beautiful people. It is Monday, March 6th. It's Rich Brecklin, your fourth favorite Arizona real estate agent with Real Broker. Today, we're going to talk about mortgage rates. And if you're in the market or looking at it, you've seen they have gone up compared to where they were a month ago when we had that dip. And people thought, oh, great, we're going to go back to where we were and this would be great. And we saw that in the market. We saw more homes go under contract. Well, the market said, not so fast. Rates are going up, and sorry, some of you are priced out. Better luck next year. But welcome to the channel, or welcome back to the channel. Like I said, my name is Rich Brecklin, your Arizona real estate agent. But let's get into this. So, again, with rates, and we're going to look at this trend here of where we were. Now, I know it's not, I don't want to dwell on the past and look, oh, here's where we were. Here's how great it was. Don't you wish you took advantage of it? And some of you did, and some of you didn't, because it was insane. Just the fact we had 2,500 single family homes at one point, and there's 80,000 realtors here. A lot of people tried to buy homes and simply were not able to. So yeah, some people were able to get homes, get low rates, but it came at a cost. And some of you were not able to, but I helped you out this year when there wasn't quite the competition. So back in, 2018, they were in the fours, mid fours. Then we go down here. So, and I want to bring up this point. So right around early winter, late fall of 2019 to 2020, I remember people and economists, everyone's talking, we were preparing for rates to go up to 5, and they're talking about them going higher. And at one point they did go up to 4, and that was March 13th. And we all know what happened then. That's when, the world started putting the locks on everything, and the whole COVID thing took off, and there's a lot of uncertainty, and then rates dropped. So I was already preparing my business, my clients, for an increase in rates, and then the bottom fell out and rates dropped. And then we were down to, just the crazy amount of, low rates, as I've heard my grandpa say, money is cheap. And it was then. It was insane, just the deals some of my clients were getting for 30-year fixed rates. And then, as we all know, in May, June, we started to see those rates creep up. And that's when we started to see inventory pick up. And we went from 2,500 single family homes a low, but that obviously came up a little bit. And then when all this happened in the fall, we went to 17,500 single family homes. Now that's still below where we should be at Phoenix Metro, but much higher than what it was. And again, a lot of people put the brakes on. I saw a ton of sellers panicking. And I also saw some sellers who didn't quite get it and were pricing their home like it was, 9 months prior. So anywho, we went up, and the trend has continued to go up. And at one point we had 7.5%. And then in January, February, rates dropped a little bit, and people felt, okay, this feels good. This is going to be normal and affordable. I can handle the 6%. And I had a lot of clients who were buying the rate down, getting incentives, getting new build incentives, and they were still getting rates in the 4s and low 5s. And then this last week, well, not so fast. We are around 7%, some people a little over. Now, when you look at these rates, March 3rd, it came out on mortgage, right here, Mortgage News Daily, 6.97. That is with good credit. I was just talking to a lender friend, and he's like, oh yeah, we got a client under contract, and their credit being what it was, they were paying above an 8%. And the way people are spending, and with the credit card debt people have and the auto loan debt people have, I suspect there's going to be a lot of people, depending, especially your entry-level buyers, not even entry-level, but they're going to be paying a higher rate because of some of the poor credit, and who knows what their financial situation was over the last 2 years. Were they out of work? Did they had to take on more consumer debt? Do they run up credit cards? I'm seeing a lot of that. I mean, look at the auto loans where people are overpaying for a car. I had I was looking at a new Ford Bronco and a new Toyota Tundra, like both, right? But I was not going to pay $10,000 to $20,000 over sticker price for a vehicle. Instead, I just kept my 2011. I washed it. I'm like, you know what? Point A to point B, we're good to go. It was more of a want than a need. So here we are at 7%. Now, what does that look like on a monthly payment? And, our average price right now is still around $520, $530, give or take. So I'm going to pull this up here real quick, and that way you can see what that actually looks like on a monthly payment. So a loan of $500,000, putting 5% down, we're just going to look at principal and interest, and we're going to use the rate of 7%. And that is a monthly payment of $3,160 just for principal and interest. It's a loan of $475. Now, if we go backwards at a 6%, and you can use this number again if you're going to do a rate buy down or a temporary buy down, depending on again what that actually gets you. But we'll just use 6 for this example. That saves you around $300 down to $2,847. And if rates continue to go up, and we're going to see some 8s, then you're at another 300 higher at $3,485. Now, no one wants to pay more, right? Everyone wants the best deal possible. So what does this mean? Well, it means some buyers are going to be priced out of the market. Some buyers are not going to be able to afford the house that they want. It also means some sellers are going to have to price their home strategically. Now, the one saving grace for sellers right now is we are at a low inventory, and it's going to be interesting to see what happens, because you're going to have sellers who, are not going to relocate from here. They own their home, and maybe they refinanced when the rates were low. And they have we'll say a 3% 30-year fixed, and there's been appreciating since they bought their home. And so they're going to sell that home and that payment they have, and now they're going to try and buy a home that is more expensive, and now the rate's going to be higher. Well, a lot of those people, depending on how bad they want to move and what their financial situation is, then they are going to say, no, we're going to put brakes on. That's not what we want to do. But the saving grace for them is they're going to have a lot of equity, since if they've owned their home over 2 years, they're going to have a good amount of equity to put down, and that will help them. But this is going to keep inventory, I believe, just pull back some. Again, we'll see what happens as this progresses and what we see here, but it's inventory is still low, and that's help keeping prices from falling out too much. Now, when we start seeing some of the foreclosures and distressed properties increase, and I think in tomorrow's video, that's what I'm going to talk about. This is some trends I've been looking at when it comes to foreclosures, and a lot of people have been talking about it, getting messages about it, and it may not be what you see. But with rates doing what they do, if you're a buyer, just be smart and try and get a seller concession if at all possible. And if you're looking to get into a new home, thankfully, a lot of these builders understand what's going on, and they have incentives to buy down the rate or getting in a locked like salmon, a locked rate. That's with one of my clients just getting a 4% concession from the builder, and that helps out a ton. And again, just to cap things off, my favorite report, just to show you where we are at. Pay attention to this: active, single family, detached. Main number I look at, we're under 12,000 still. But pending listings, we're up from last month. So this is a good sign, because even with these numbers now, these people have been under contract that are pending are with the higher rates than what we were. So that's good that it's still going up from last month and last quarter, obviously down from the last 2 years. And this other number, I always like to see the listing success rate. This is up from my last video, and I'm going to do a video every day this week we can look at this number, that we can see this trend that is happening. Again, up from last month, up from last quarter, and we're not worrying about the last 2 years. And then the Crawford Market Index, again, up, 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 down, down, but above 100 sellers market. Again, so a lot of these lagging indicators, we'll see what happens. We'll see with, the CPI, we'll see with inflation and what that means for you, the consumer. But the fact of the matter is, if people are looking to move here, or they're relocating for work, or their desire is strong enough, they're going to buy a home. So the good thing about Phoenix Metro and this market are just the draw it has for people and businesses and retirees and people that want to live here. I think the people that are already here, that are move-up buyers, that's where you're going to see some issues, because their desire is not strong enough. But obviously, it's up to you. It doesn't make sense for you. Do you want to move? And the market's always right for someone. Just have to determine, is it right for you? If you have any questions, you want to see what this looks like for you, send me a message. I always respond. I always answer the call, because that's who you get when you call. That number in my description is me. But look forward, follow me on Instagram, and I'll see you on the next one. It's Rich Brecklin, Real Broker.